Hello dear traders, let us review what happened in financial markets last week. Last Monday and Tuesday, no significant economic data were released in US. US stock market indices rebounded after a severe fall in previous week. On Wednesday, the stock market rout continued due to the mixed economic data from beige book and weak financial statements from S&P 500 components. Investors expect the earnings of S&P 500 companies will fall 4.8% in the fourth quarter of 2015 compared to the same period of 2014. So the negative trend will persist for 6 months in a row. The beige book showed a modest economic expansion in 9 out of 12 federal districts despite the improved consumer spending in the holiday season. Meanwhile, half of the districts experienced a slump in manufacturing sector. On Thursday, US stocks were struggling to reverse the downtrend on strong JP Chase financial data, while the weekly unemployment data turned out to be well below expectations, which weighed on consumer confidence. On Friday, the most significant economic data were released. The retail sales and industrial production for December, which came out negative. US stocks tumbled on this data. The retail sales fell as warm weather in US reduced the demand for winter clothing and footwear. Cheap gasoline was another factor. Moreover, industrial production fell for the third straight month in December because of strong US dollar. However, last week US dollar edged up only on Monday, hovering since then in a very tight sideways channel. The earnings season is in full swing in US, but the data are not too positive. On Friday, Intel stock suffered a daily fall of 9.1% on weak quarterly report, a record in 7 years. In general, last week the Dow Jones and S&P 500 indexes lost 2.2% each, while Nasdaq lost 3.3%. About 100 S&P 500 companies hit fresh 12-month lows. This week will be short due to Martin Luther King holiday on Monday. The most significant economic data, the December inflation, will come out in US on Wednesday. Inflation is expected to increase slightly, and markets may react positively to the sign of improved health of US economy, as anticipated by Federal Reserve's recent policy statement. This was all for the week. Happy trading and see you next week.